welcome to Bloomberg Quint Live. I'm Shraddha Babla and you're watching What Did You Miss? And before we can take you through the top stories of the day, I would like to wish you all a very happy 2018 from me and the entire Bloomberg Quint team. With that, let's go to the headlines. The Indian equity benchmark slipped the most in a month while a gauge of volatility for stocks surged to a 2-week high. Wipro was the best while TCS was the worst performer. JSW Energy informs the exchanges that it's not going to acquire Jaiprakash Associates' Bina power plant. And GST anti-profiteering body issues notices to at least 5 entities. This is the first time that such notices have been sent to traders and business houses since GST was launched. And Maruti Suzuki December sales show a 10% increase on the back of lower exports and a scheduled plant maintenance shutdown. Mahindra & Mahindra's total sales grew by 8% as expected. And now let's take a look at how the markets fared on the first trading day of this year. Neeraj Shah standing by to take us through all the action on the Dalal Street. Neeraj, it's not been an optimistic start at all, with the Nifty posting its worst first day of the year in 25 years.
Well, it was a terrible day indeed, more so because of the last 1 hour of trade. Okay, let me rephrase myself. It wasn't terrible. It was a 1% downtick that happened, but it was a standout move because it's the worst move in the last 25 years. It didn't impact the mid caps and the small caps as much though. Yes, they came off and the market breadth became adverse, but it still was in favor of the advances. However, Nifty Bank down about 1%, mid caps, small caps marginally in the green. Let's bring up the individual components. So the heavies corrected a bit. HDFC Bank down about 1%, You will see this was the pattern. Reliance down about 1%, as well. TCS about a couple of percentage points. So no big sectoral downtick, but a clutch of heavies moving down. What was bucking the trend? I think India Bulls Housing, and then Nifty Realty Index of course did well, but no index representation there. But India Bulls Housing certainly doing well for itself, up about 1.5%. Non-index, I think the momentum continued for the Anil Dhirubhai Ambani Group stocks. So Reliance Naval about 32%, Reliance Power about 20% and a clutch of other Reliance names continued to do well. It was an interesting day for select power names. So I saw Reliance Power there. Look at Adani Power 2%, Tata Power about 3.5%. All of these, mind you, came off a little bit towards the close because of the pressure from the index, but still ending the day in the green. The news report in Business Standard about CITCO clearing the land development in Navi Mumbai for a property, a large one at that, got Jaycorp, Skill Infra and Reliance Industrial Infra fairly excited as well in the session today. Good gains for both of these stocks at least. And speaking of land development, I think real estate by and large had a fabulous outing today as well. Marathon 15%. Phoenix Mills came off a little bit but was up about 5 or 6% at a point of time. Unitech was up. Suntech Realty was up. So a clutch of those names had a fabulous outing as well. Not too many losers, but for Bombay Rayon, Fashion, and then a clutch of other names which came off a little bit, but nothing noticeable out there. The mid cap end clearly belonged to the gainers. The large caps lost a lot of mojo towards the last 45 minutes of trade, but there is no telling whether this pressure will continue in tomorrow's session or not. Back to you.
Thanks for bringing us all those details, Neeraj. The advanced decline ratio of cost remained broadly equitably distributed. Let's also take a look at how the Indian rupee fared. The currency markets, the rupee rallied to a 5-month high today on the back of possible inflows into bonds. The rupee gained nearly 0.3% against the dollar today to 63.57 after touching 63.65 levels earlier in the day. Remember, the RBI had raised investment limits for foreign investors in central government bonds for January to March quarter by 6,400 crores. Bloomberg data shows that foreigners bought 14 lakh crores worth of rupee bonds last year and $7.7 billion worth of stocks. Another bit of development was in the power sector, where JSW Energy informed the exchanges that it's not going to acquire Jaiprakash Associates' Bina power plant. Jayesh Khilnani has all the details in this report.
First, let's analyze the timeline of this long pending deal. So in July 2016, JSW Energy had intended to acquire the Bina power plant from JP Power. That is a 500 megawatt power plant. At the same time, they also had to acquire a 1 gigawatt power plant from JSPL. Now, fast forward to 2017 May, the management had said that they have extended the long stop date from 31st May to 31st December 2017. And today, what has officially come on the exchanges is that because the time has elapsed now to evaluate the deal, and that's the reason they have decided to terminate the agreement to acquire the Bina power plant. Now, Ambit had come out with an interesting note when the deal was originally announced. What they said was that the deal is actually value accretive for JSW Energy. It was estimated to have an enterprise value of 2,700 crores, and they were expecting that on account of this deal, 3.5 rupees or close to that will be added to the EPS of JSW. What they have changed their stance to is that right now the deal, since there was no progress, the deal was most likely to be called off, and the management too had indicated about this. And they are now of the belief that this is positive for JSW Energy, as there will be no risk of equity dilution.
Thank you for those details, Jayesh. Jayaprakash Power Ventures declined over 3% on this news. Meanwhile, shares of Golden Tobacco ended about 5% higher after a fresh takeover offer was made for the company. Bidders have offered to buy 25% stake through an open offer. Agam Vakil is standing by with what's on the table. Agam, this is not the first open offer attempt from the promoters.
Right, so the shares of Golden Tobacco did close in an upper circuit of 5%. This was after there was an open offer made by one Pramod Jain and also another entity, Plus Corporate Ventures, also owned by Pramod Jain. This is the open offer for 25% stake or a little over 44 lakh shares, and the open offer has been made at a price of 101 per share, which is nearly twice as much as its current market prices, also after considering its upper circuit. Interestingly, the promoter had earlier made an open offer in 2009 and had sought to withdraw it, and once again, because of regulations, we'll have to wait and watch for more developments on this one.
Thank you, Agam, for those details. But another stock that managed to end with gains is Indian Oil Corporation. The oil marketing company has hiked aviation turbine fuel prices for the 6th consecutive month. The prices now stand at a 3-year high. What does this mean for domestic airlines? Somit Sarkar has all those details in this report. Somit, you've done all the math.
Jet fuel will now cost the airline companies anything close to 59,329 rupees per kiloliter in the month of January. Now, this price is an average of prices in 4 cities, that is Delhi, Kolkata, Chennai, and Mumbai. Now, the price hike have been the prices have been hiked for the 6th consecutive month considering the month of January, and in the month of January the prices have increased by just 0.6%. Although the prices have been hiked for the 6th consecutive month and the prices are at its 3-year high, but the quantum of hike is very low when compared to the previous hikes in the last 6 months. Now, in the last 6 months, the prices were hiked in the range of 2 to 6%. So this price hike of just 0.6% is very less when compared to the price hikes that have been done earlier. Though this price hike is very less, but it will have an impact on the profitability of the airline companies to some extent, as fuel cost eats up nearly 1/3 of their revenues. Now, for Indigo, in the last 5 quarters, fuel cost was around 30 to 37% of the total revenue. For Jet Airways and SpiceJet, it was in the range of 22 to 29%, while for SpiceJet it was in the range of 26 to 34%. Now, for the exact impact of the hike in fuel cost, we'll have to see how the prices remain in the next 2 months, that is February and March, and then we'll have a clear picture of how the prices will impact the airline companies in the 4th quarter of financial year 2018.
That's right, Somit. Thank you for getting us those details. Of course, we will be waiting for the 4th quarter, but airline stocks didn't see much negative reaction today. But the one sector which took the deepest hit today was the auto sector. Let's go to the auto sales data. As of now, Maruti Suzuki and Mahindra have reported their monthly sales numbers, and Yatin Mota is standing by with all those numbers. Yatin, are they as expected?
Well, if you look at the auto sales data so far, more or less in line with the street expectations. In fact, if you look at Mahindra and Mahindra automotive segment, the growth was close to 8%. which translates into 39,200 units. Now this was better than the estimates of close to 37,500 units. Similar is the case with Maruti Suzuki. Total sales growth seen at close to 10.3%. Sales came in at 1.3 lakh units. And more importantly, this time we had a 1 week maintenance shutdown at Maruti Suzuki's key plants, because of which the overall production number got impacted. So despite the demand being there, lower production was the reason why the number was slightly lower than the street expectation. In fact, analysts were expecting a 25 to 30,000 unit loss in production because of the maintenance shutdown. So despite that, Maruti keeps the clock moving on the positive side for the auto sales. Escorts also, we saw 13% growth coming in. Total sales stood at 3,600 units for the tractor segment. And we have TVS Motors, which has come out with a decent growth number. Numbers were above the street expectations. We have TVS Motors, which has posted a growth of close to 39%. So far, the overall auto numbers have been good. Of course, the high growth that you see is largely because of the fact that last year, same time, we had the demonetization, event happening in November and December, because of which the base was low. But on overall basis, December, because of higher discounts and sales promotional and marketing activities of auto companies, the overall number has been healthy so far.
Thank you for those details, Yatin. Of course, we will be watching out for how some of the other automakers fared in December. Moving on, the State Bank of India, or SBI, has lowered its base lending rate by 30 basis points to 8.65%. Now, with this reduction, SBI's base rate is lowest amongst other lenders. The effective rate for a period of 1 year under MCLR, however, stays unchanged at 7.95%. So essentially what has happened is that the interest rate differential between the MCLR and the base rate is now down to 70 basis points from an earlier 100 basis points. The bank has brought down the base rate rather than shifting the base rate linked loans to MCLR so that it can continue to earn a yield benefit on the base rate linked loans. The management attributed the rate reduction to the wide gap between the MCLR and the base rates. Listen in.
Most of our customers on the corporate side, they have already moved to MCLR, but there are a few of our customers, particularly on the home loans and some of the auto loans, who continue to be on the base rate. So this move will benefit all of them. I think in terms of numbers, it's quite a large number. I think about 80 lakh customers. It may not be very large in terms of amount, but they will be benefited by this move. So basically what has been happening is that I think these policy rates that have been going down, and we have been saying that, the immediate impact of it does get translated in terms of MCLR, so all the new customers immediately get the benefit of it. The existing base rate mechanism, the transmission happens with a bit of lag actually. So that is what is getting transmitted to the base rate linked customers right now.
Shifting focus, the GST anti-profiteering body has issued notices to at least 5 entities. Now, this is for the first time that such notices have been sent to traders and business houses after GST came into force from July last year. Nikunj, which are these entities and why have they been pulled up?
The government has issued notices to a few companies for profiteering after the implementation of goods and services tax in India. The companies against whom investigation has been initiated by the Director General of Safeguards are Hardcastle India Private Limited, Lifestyle International Private Limited, a Honda car dealer, a dealer dealing in products of Hindustan Unilever, and a construction companies. These notices have been sent out by Director General of Safeguards, and these companies have to respond within a stipulated time whether they were actually profiteering, and also determine what was the profiteered amount that was realized by them by not passing on the rate reduction to consumers and not passing on the benefit of input tax credit. In the case of Hardcastle Restaurants Private Limited, the company that runs McDonald's outlets across South and West India was found not passing on the GST rate reduction to consumers after the GST rate on restaurants was reduced from 18% to 5% from November 15. 2 complaints have been received by the government against McDonald's outlet for not passing on a rate reduction on a cafe latte that's served by McDonald's outlet run by Hardcastle Restaurants Private Limited. In the case of Lifestyle International Limited, which runs retail outlets across the country, was found not passing on a rate reduction, GST rate reduction on a makeup item after the GST rate was reduced on that particular makeup item from 28% to 18% from November 15th. In the case of a dealer that deals in Hindustan Unilever products, a complaint was received that the dealer has not passed on the rate reduction on a Vaseline lotion, on which the GST tax rate was reduced from 28% again to 18% from November 15. A construction company by the name of Pyramid Infratech Private Limited, based in Gurugram, was found out not passing on the benefit of input tax credit, and the complaint was filed by 36 home buyers, wherein they've claimed that the company has not passed on the benefit of input tax credit that the construction company is getting after the implementation of GST to consumers. In the case of a dealer of Honda cars, a complaint was received alleging the company of calculating the price of a particular model of Honda by calculating by including pre-GST levies on the price of car, and then imposing GST on that particular model of car, inflating the price of the car. Now, these companies have to respond within a stipulated time, and the Director General of Safeguards, as per the anti-profiteering rules, has 3 months to investigate whether these several companies have actually profiteered with the implementation of goods and services tax.
All right, thank you, Nikunj. Those were the latest updates with respect to GST. But as we enter a new year, a year packed with elections, what must Prime Minister Narendra Modi do to ensure a minimum government legacy? Listen in to Raghav Pal in his latest video column.
Back in the USSR, boy, you don't know how lucky you are. You know, I was reminded of this song when I read the Modi government's public procurement policy order of 2017, which says that for any tender that any Indian government department or company puts out, Indian manufacturers will be preferred and will be given a 20%, yes, a 20% price advantage over foreign suppliers. The reason it reminded me of USSR is because this is very similar to the Soviet-style planned economy of the 1970s. Very protectionist, very trying to cut yourself away from the world. You know, I couldn't help but think of when I met Prime Minister Modi, who was then Chief Minister of Gujarat and a prime ministerial candidate of the BJP. I met him in April 2013. We did a Think India dialogue with him. And I remember he electrified all of us with that phrase, minimum government, maximum governance. Unfortunately, the slogan has gotten transformed in the last 43 months to maximum government, maximum economic statism. So can the Prime Minister do something in 2018? Can he make a few New Year resolutions which can repair the kind of interventionist state-controlled economy that we have become in the last 43 months? Well, I think he can make 3 New Year resolutions. Number 1, when it comes to the goods and services tax, GST. Now, let's not quarrel with words here. The GST is a fundamental reform. It's a massive reform. But some of the features that have been introduced, which actually lead to a lot of intervention and a lot of problems for people, those should be done away with. There is something called the National Anti-Profiteering Authority. Can you believe it? We are in 2017-18 and we are talking about an anti-profiteering authority. Somebody to whom a consumer can make a complaint, say that I am being overcharged by such and such producer. The government will have the right to go in and check the books of accounts of that person, and hold on, if the government finds that there is actually been profiteering, then it can order that the profiteered amount is returned to the buyer with an 18% penalty. Can you believe this? Can you believe this is about free markets and well-regulated competitive markets? So really, this anachronism called the National Anti-Profiteering Authority should be simply disbanded. Then we have another thing called the e-way bill. Now, you know what that is? If you buy or sell anything worth more than 50,000 rupees, yes, as small an amount as 50,000 rupees, then you have to generate an e-way bill, which will then track in real time the movement of that purchased commodity or product within the city limits, across city limits, across states. So you have this one electronic sort of octroi bill, if you will, which will be tracked wherever the goods go. This is, again, it's over-controlling something which doesn't need that kind of control. Then the GST has got another wonderful thing called invoice matching. Now, invoice matching is foundational to GST because unless the invoices are matched at the back end, you don't know whether the tax credits that have been availed of are right or not. No problem, no quarrel with that. The problem happens when I, who have filed my GST forms, am told to wait for my tax refund until the person from whom I have bought the goods has filed and until our two invoices have matched. Now, my question there is, I have paid my tax, I have done my filing, I have no way to control whether the other person has done his or her filing. So why are you holding my refund up until that other person has filed his taxes? One of the other big reforms that the government announced was bank recapitalization bonds. Now, this was something which was celebrated by everybody because it was seen as a fundamental reform. I beg to differ. It is not a fundamental reform. Bank recapitalization simply means that you pick up the depositor's money, you take that liability on the bank's balance sheet, you convert it into an asset. So it's actually an accounting sleight of hand. It's not a fundamental reform. If the government is willing to commit, let's say, 1 lakh crores out of its kitty to bank recapitalization, then there are several modern equity models which can be deployed to do a genuine equity reconstruction of the balance sheets of banks. For instance, the government could have done a deep discount rights issue of the banks in which every shareholder could participate. The government could have used its 1,35,000 crore commitment to underwrite such a rights issue, and in fact, with the same amount of cash, would have doubled the equity infusion into banks' balance sheets. I think if the government was to step back from it and say we now have a new bank recapitalization scheme which uses modern equity dynamics, that would be a fundamental reform, and that would also ensure that the government steps back from being this old world interventionist statist government. And of course, I think if the government was to resolve to make sure that Aadhaar is used only for the purpose for which this wonderful, innovative scheme was created. It was created to ensure that beneficiaries of states' welfare programs have a unique identity. Today, Aadhaar is being used for almost everything. If you have to put your child in the nursery school, you need Aadhaar. Why? If you are an HIV patient, you have to register with the National AIDS Control Organization. You need Aadhaar. Why? Why is the state trying to track what I do, where I spend, where I send my child to school, what is my health problem? This is intrusion on an astronomical scale into the private lives of individuals. My sense is if the government does these three things that I've just listed out on GST, on Aadhaar, and on bank recapitalization bonds, then it can reclaim some of the free market, competitive market, right of center economic philosophy that the government had promised when it was elected, but which promise has, as I've shown, been belied in the last 43 months. And you know, in the end, I'm just reminded of the Beatles song all over again, because if this government doesn't do the kind of economic resolutions for 2018 that I've talked about, then the song will pretty much be back in the USSR. Boy, you don't know how unlucky you are.
All right, an interesting take, that one. But with that, it's a wrap on the show. I hope we helped you catch up with all that you missed through the day. Thanks for watching and stay tuned in to Bloomberg Grid.
Are we live?